was the 30th of October, 2024, the day before white paper day. Right? Bitcoin will be 16 years old tomorrow. So, yeehaw, sweet 16 of Bitcoin. What a party. And I'm sure there'll be a great big Satoshi reveal. No, probably not. But what is interesting is, will there be an all-time high today or tomorrow to bring in the 16th birthday of the Bitcoin white paper? I can tell you that as a trader of low time frames, I don't care. But as somebody who observes the market and looks at the peanut gallery and what they're all talking about, I guarantee you people are going to talk about that. You're going to see a lot of tweets and posts and other silly kinds of messages saying, yeah, it's happening. The ATH is because of that. It has nothing to do with that. If you just look at the VRE, and you look at the VEPs, you look at the volatility and the entropy on the daily time frames, and you'll see very clearly, right, what it's doing is very much in line with what the probabilities are just indicating, right? They're just saying very clearly where the asset is likely to go on any given time frame. So if you look at the daily, yeah, there's pretty good probabilities, right, that we could see the week end with a pretty solid number at or above the all-time high, right, the ATH. But guess what? There's also just as equal, well, almost as equal probabilities that it will actually not go there, and that targets to the downside will be hit. And what will that depend on? Well, very simply, it will depend on the amount of buy pressure and sell pressure in the market, right? It will just very simply depend on whether or not there are more buyers than sellers. Hey, doggy. How you doing, buddy? Want to smell me? Okay, smell me. You smell my dog? That's okay. You smell my dog. Yeah, this dog loves to smell my dog. Okay, sorry, shalom. Hey, doggy. Little tiny dog just wanted to sniff my shoes and smell my dog. Smell the scent of my dog from my shoes. That's what happens when you have a giant dog. Every other dog sniffs you and like, oh, you have a dog. Yes, you have a dog. When you have a giant dog, it is impossible for other dogs not to know it, even if the dog is not with you. And that's one of the great things about dogs. Dog recognizes dog, right? Or dog recognizes dog owner. Anyway, so what is happening with the actual buying and sell pressure at the moment? Well, if you looked at the buy and sell pressure yesterday, you'll see that during the live stream that we did at Alpha Trading, on the low time frames, the moves up and down hit targets precisely, right? And then later in the day, the further move up went, exactly to the target that we discussed on the live stream. And from there, people took profit and then came right back down. So, not an accident. When people say, no, you can't predict the future. Well, all I can say is when it comes to assets and the tendency of the likely direction of their move, right, given the probabilities and statistics, using volatility and entropy correctly, you actually can predict something about the future. It is with a great deal of accuracy that you can predict the probable price action of any given asset on the market. And when people tell you that you can't, and that you're just gambling, it's because they don't know how to use leading information. They don't even know what leading information is. So if I put you in a car and said drive it, and you've never been in a car before, and you've never seen anybody drive a car, and you've never seen a car, you wouldn't even know what drive it means. Let alone would you be able to figure out with any great degree of certainty how to drive it right away. Now, could you figure it out in time by studying it, learning it, understanding, getting a proper comprehension of the device, and then all that? Yeah, sure. But if you just enter a car and you've never seen a car before and you've never heard of the expression drive, you wouldn't even know what the person's saying to you. It's the same thing. People who use lagging information don't even know what leading information is. Now, they might think that they have high quality information because they're told that by the people that sell them lagging information. But they don't have high quality information, right? They have very low quality information. And that's provable. How can I prove it? Well, statistically, most retail traders use lagging indicators, lagging information, right? They use indicators based on price action, which by default means it's lagging, because price action is just a result. It's not leading information. But most people think that price action is leading information because they see the candles move and they're like, oh, that's what it's doing. What is all this other information telling me about it? Well, that's because all those other tools that they're using are built based on the price. So of course, they first see the action move and then they see the indication tell them what to do. But leading information, it's the other way around. Leading information, it's the indicators that tell you first what is happening, and then the price action follows suit. Now, it can be very, very close in terms of the timing. Like if you're on a low time frame, like a 1 minute or lower, you can see it happen within, the tiniest fraction of a split second. So it can appear like the lagging information is moving at the same time as the indicators, but it's not. The price action, which is lagging information, is following the returns. Right? The price action is going the way that the volatility and correlation is indicating most of the time. Like the vast overwhelming majority of the time. When I say most of the time, I mean practically all the time, except for the random occurrences when it doesn't. And when price action is moving, it's also moving based on what the entropy and correlation are telling you. Right? The entropy and correlation are just as valid as leading information. In fact, sometimes they're more accurate even than the volatility and correlation. Depends on the asset and the context and everything, but typically that's why we use volatility and entropy. Now they're both accurate. You can use them both, no problem. But if you use only one or the other, that's perfectly fine. I just find that it's better to use both. And that way you have the volatility and the entropy, because entropy is incredibly accurate. By the way, speaking of entropy, we recently re-released our entropy indicator at Alpha Trading. It's now called Entropy Pro Plus or Entropy Pro, something like that. So the old version of it, the recent version of it is called ATH Swiss or Alpha Trading Swiss, because it was inspired by like the concept of a Swiss Army knife. Because under the hood, that indicator does a lot more than just entropy. But just to keep it simple for everyone, especially the new people, we renamed it Entropy Pro. And you can see that when you have access to the Pro Traders subscription, whether you have the free trial or you have a paid subscription. You can see right there in the indicators chart or in the indicators list. And something we did recently at Alpha Trading is that we actually opened up access to our Pro Traders account or subscriptions, which we did not used to do. But we get a lot of requests from people. We keep telling them, listen, if you try this and you don't know how to drive it, there's a high likelihood you're just going to crash and burn and you're going to disappear after a month. And people just kept saying, no, we just want to try this. I say, why don't you learn with the free tools first? No, I got the free tools, but I don't want to spend them. I see that they work, I say, after a day or two. I see they work. Just give me access to the Pro Tools. Okay, if you think so. So now, kind of begrudgingly, I got to say, very begrudgingly, we have, but happily, whatever. It's what the people want, so we give you what you want. So now anybody can just jump into our server and go ahead and sign up to the Pro Traders subscription. You can get the free 2-week trial if you want. You can, of course, still get the free access to the Volatility Starter Kit, which I highly recommend. They're free tools. Why not use them? Like, zero reason not to use them and learn from them. But for the folks who want access to the Pro Traders tools, you can now go ahead and enter the Shop Alpha channel, which is now right beneath all the general channels. So it's no longer at the very bottom of the channels list, because if you've been to our server, we have a relatively long channels list. And now it's all the way near the top, literally right underneath the general channels. So you should see it right there. And yeah, that should give you everything you need. I'm not sure if we're going to have a Black Friday thing or not. Maybe, maybe not. Not sure if we're going to have a Cyber Monday thing or not. Maybe, maybe not. But they're so cheap anyway, at like $99 a month for a month-to-month subscription. And it's even less if you buy for 6 months or a year. I think the price that's currently there literally was our Black Friday deal like a year or two ago. And we just kind of left it at that price. So, you're already getting the Black Friday deal that just never ended, which is ridiculously cheap. There are lagging information tools that people sell for $300, $400, $500 a month, even $1,000 a month. They sell tools and a course or whatever, garbage. Selling lagging information garbage that's designed to get you wrecked because you are the liquidity that the market wants. And the people selling you that garbage, they're just shilling for companies that want your liquidity, usually exchanges, right? That's why they have all these affiliate links. Join now and use my bonus. What is the bonus, right? It's a deposit bonus. What does that mean? It means it's an amount of assets that and the virtual assets, really, that the exchange puts in your account when you make some amount of deposit in order for you to use leverage and to use up that bonus by losing trades. And the more you deposit, the bigger your bonus. And so, you feel like you have mightier buying power. And so you lever up, as they say, or you use more leverage. And then you end up having positions that you really should not be having. Even if you win 1 or 2 or 3 in a row, you think, wow, I'm great. And then you start losing. And then your profits quickly disappear and suddenly you're in a loss. And then suddenly you lose your bonus money, right? And that bonus money you usually can't cash out unless certain things happen. So yes, if you use it to trade and you actually generate profits and you hang on to those funds for like a month or 2 or 3, it depends on the place, then sometimes they'll let you, cash out that bonus. But in most cases, they don't have to do that because they know 99% of people who trade with them get wrecked within like 3 months. Right? It's the 90-90-90 rule. 90% of traders lose 90% of their capital within 90 days. And given that people have like up to 100x, 125x on crypto exchanges, or even more, on commodities exchanges, they get thousands of X because commodities move so little, relatively. It's not even 90 days, right? Traders lose pretty much 100% of their trading assets. Like 99.9% of traders lose 100% of their trading assets. Pretty much, they get wrecked completely within like a month or two. But the 90-90-90 rule is still called that because when you're a marketer, you're looking for people that you can bring in to that 90-day cycle. But the thing is, you know that they're going to be out within a month or two. So you're constantly bringing in new people. Like the chase is on nonstop. Which is why, again, it's a bad idea to trade with their tools and to use their bonuses and leverage. Because they've calculated this very well. Hi, I see your message. Hello there. Right? They're not dumb, these exchanges. They know exactly how to take your money. And for most of you, that's exactly what they're going to do. They're going to take your money. And if you're not smart, and if you don't take your profits early and often, and if you don't limit your loss, and if you're not, emotionally unattached to your trades, if you actually care about the trade that you're in, you're going to lose it. You're going to lose it all. Pretty much. That's the odds of what's going to happen. Very simply, because trading is something people should only do with math. But unfortunately, most traders use irrational emotions to trade. I am standing here waiting for this big arm, mechanical hydraulic arm, to pick up the garbage. The leaves and tree cuttings and other things people throw out that the garbage trucks don't normally take. There you go. That's why there was all that noise. There's a very large truck with a very large mechanical arm that makes a lot of noise. So Bitcoin, all-time highs versus war and peace. Well, it's always going to be essentially a battle on the market between the buyers and the sellers. And if you thought I was going to talk to you about the actual war and peace happening in the world, I shall, but maybe not in this video. Other than to say I wish everybody would live in peace, but real peace, good peace, not peace that's just a temporary pause in fighting. That's not peace, right? All a temporary pause in fighting is, right, a ceasefire or a hudna or whatever you want to call it. That's just all a mask. It's all a band-aid to cover up the true underlying problems that are infected and festering beneath the surface. And that doesn't help anybody, because it just means there's going to be more violence again soon at some point. So I wish a real peace and real prosperity and real health and real happiness for everybody. That's what I wish for. And apart from that, I hope you all have a fantastic day and happy trading. Cheers.